listening to Pre-Market Prep. I'm Brianna Valesky on the line with Serge Berger. He is the head trader and investment strategist at the Steady Trader. Serge, thanks for joining us this morning. How are you doing today?
Good morning, Brianna. It's good to be on. I'm doing well, thank you.
Absolutely. We had the unofficial kickoff of earnings season last week with Alcoa, and this week we're going to start to get some of these big banks' earnings. What are you looking forward to heading into the trading week?
It's it's been quite a week and a half, and I've been saying all along that we're going to have this correction, and then finally we started having it in August. And I
Mm-hmm.
remained negative on the market throughout September, but about a week and a half ago, started kind of switching more to a neutral point of view position, medium term, bullish immediate term, because it was obviously very bullish the reversal we had two Fridays ago. And I think so. The question that we now all have in our minds is whether there is another leg lower, or whether this is it. It really is like from both from a structural and technical position. We really could have either situation unfold. I will say that from an economic and bigger backdrop perspective, I think we're going to have a lower low at some point in the next 6 to 9 months. That's my sort of base case. But the question is whether lows are in for the year. And I think if you look at things like the way some of so the rally basically has been led by some big short covering stuff like energy and materials. Biotech's been lagging, although that's been leading for the past 5 years. So that'd be something that bears would point out. The bulls would point out that, well, we've got seasonal tailwind that might be able to help us out. Albeit the rally has now come a little bit too early. Usually don't see a more meaningful low until mid to late October. So it really is a mixed bag of nuts out there, and I'm thinking earnings is what's going to have to potentially resolve this question.
Yeah, absolutely. I think we've just kind of quietly been waiting for earnings season to start ramping up. Are there any of the big banks that we're going to get this week, JP Morgan, Citigroup, Wells Fargo, that are kind of sticking out to you that we should be watching, or just kind of looking at them at the sector overall?
I think you watch the sector overall. Of course,
Okay.
when we talk about banks, we have to make sure we separate some of the big money center banks out from the more regional stuff, and then
Sure.
separate those from the brokers like the real investment banking powerhouses, particularly Goldman Sachs, which is just a bit of a different beast. But I think it would be a little bit silly to say, this is the one stock that we have to watch for to make or break something. That's something that's not really real. But I think what you might be able to get out of is just kind of see what the risk appetite is for people, for investors, if you either see big disappointments or big positives, right, on both the earnings and the forecasts. I think that's more what you want to see, how people react to it.
Some individual stocks we were talking about this morning. Twitter announcing some layoffs. I think it was Friday around 5 p.m. Our
Mhm.
last guest was saying that he's actually interested in Twitter now. He thinks now is the time to buy it on dips and that it might even go green today. What are your thoughts on Twitter?
I think that would be quite bullish if we see it go green.
Mm-hmm.
I actually don't know where it is trading pre-market right now, but I think that would be very telling. Um, I remain long Twitter. I was gonna say, and I think if somewhere near, I think my break even somewhere just around that 35 mark where it started falling apart, or 36 or something like that. So I still believe in the company, and like I said last time we discussed Twitter, I think considering the vast amount of people that use it, particularly in sports and finance, and the amount of information you could get out of it if Twitter had the technology to do so, which is not that hard to develop, then this stock would be at $60. But I think if you look at it just from a trading perspective, I wonder if Twitter's weakness as of late, or well, the strength that we've seen the past few weeks, and the weakness before that was not what we saw in Facebook, when Facebook it dumped into, I guess it was like the 20 or 19 area or something like that, wherever it bottomed out at the time. So I'm curious if that wasn't, it almost feels like it had that sort of a moment at this point, and shaking off a bit some news like we had last Friday after the close might just be more confirmation that there's more room to go on the upside.
That's an interesting point to make about Twitter, how it seems like the technology to figure out their monetization strategy wouldn't be that hard to develop. And I guess my question is like, then why haven't they done it yet? Like something like announcing layoffs shortly after Jack Dorsey gets in as permanent CEO, for me personally, and I'm a newer investor, I'll admit, just does not inspire a lot of confidence. So it's just interesting to hear the different side of that point of view from you.
Yeah, and that's and I think you're not the only one. I think there's a lot of seasoned investors that would agree with you on that,
Mm-hmm.
and I agree with you as well. I think there's been a lot of just a lack of it seems like it's almost like just a bad PR strategy or a lack of any PR
Right.
strategy for that
Yeah.
matter. Just not being able to find a CEO, and then the one dude they have, which is, albeit of course one of the co-founders, now he has to have two jobs, and the long time it took to do so, and now this with the job stuff, and it's just all a little bit weird. And it's after I heard comments last Thursday or Friday from one of the other co-founders, and it's really not like they're doing this on purpose. This is just kind of the way they operate, and I think it's just something. It's a maturing process that, quite frankly, all companies have to go through. So I'm not really too concerned.
Sure.
And by the way, from a fundamental perspective, the company's growing. It's just not growing as much people like it. It's still growing very, very rapidly.
Mm-hmm.
So I don't think we should forget that.
Yeah, absolutely. That's a great point. Also happening in the tech space, we have it's Merger Monday with EMC and Dell announcing this takeover. We were talking about earlier on the show. I think this is a rather interesting strategic move when you have more companies like Google just kind of breaking off into separate parts, like separate companies, so that they can focus each company on one specific thing. But then you have Dell over here just like trying to acquire EMC and just building up a massive tech conglomerate. And I think I read that this is either the biggest or one of the biggest tech mergers in history. Have you been watching this at all?
Yes, absolutely. So what I look at here is I look at this from the debt side. So this is going to be there's going to be a lot of
Right.
high yield and marginally above that sort of debt that has to be financing this deal. So for those of us that have been doing this game for more than a few years, we remember what 2006, 2007 looked like when you basically had a bubble in leverage buyout stuff. So there was a thing called TXU, which is Texas Electric Services in 2007 in June, I think they came public, and I was working at JP Morgan at the time. We were working on that deal, and we're trying to sell that debt. The company, by the way, has gone bust by now. In the meantime, and this was the largest leveraged buyout deal in history at the time, and I actually still think it might be at this point. I'm not sure though, but it's still one of the very, very largest. And just from a timing perspective, and I tweeted this out this morning. I just can't shake the gut feeling that we're kind of coming to that sort of a point. Now, I'm not saying we're staring over the cliff here that we're going to see another huge financial crisis and meltdown. But
Mm-hmm.
when I see deals like this, it's overzealously trying to take advantage of the market out there. So it's like if the Fed were to start hiking rates, you would probably see an increase in lending and borrowing just because people see now that we're moving somewhere. They be incentivized, whereas these guys are already trying to run ahead of that, if that makes sense. Or if you look at Glencore, for example, which you talked about last time I was on the
Right.
show, those guys went public, just when all major, like literally within 2 weeks after they went public, all major commodities made a lower high and have been going down ever since. So there's a lot of strategic timing that these guys do, and this is not
Mm-hmm.
necessarily their own ideas. This is a lot of the stuff they get fed by the investment banks. So yeah, I am always very cynical when I look at this kind of stuff.
Yeah, absolutely. And I think rightfully so. What about biotech? We had an interesting move with Eli Lilly this morning. It was halted, and we were waiting on the news, and it came out they were ceasing production of a certain drug. Did you watch this morning at all?
No, I actually have to say I honestly missed that. But
Okay.
but what I'll say on biotech is sort of what I said before, and I
Mm-hmm.
think it's a very obvious but it's an interesting observation nonetheless, is the way in which those names have lagged in the rally for the past week and a half. And
Mm-hmm.
I don't think we should read too much into it, but I think it would be foolish to ignore it because a real risk on appetite you would think would have seen a bit of a better bid in some of that stuff, and that hasn't happened yet. So I'm just kind of cautiously watching that to see if that's if they're either going to catch up or they're just going to drag everything else down.
Yeah, absolutely. Did you catch any of the trading action in lumber liquidators last Friday? Got a little bit of a short squeeze and a pop in there.
Yes, absolutely. So, I mean, this stock obviously isn't shy to real volatility. And what I would say when it comes to this name, first of all, many people have gotten this name wrong. Not just this year, but like before that. So this thing is not necessarily very correlated to the housing market. So I mean, I know there's a whole other issue with this company that came to light in February,
Hmm.
in March, but a lot of people still like to play this as a proxy to the housing market, and I think that's foolish. So the lumber price in general, yes, there's correlations with the housing market here and there, but you have to understand a little bit more where we are in the cycles, and then just to say, oh, lumber's going lower and the housing market therefore it's going to fall apart. Well, if you looked at the chart of lumber, the price of lumber, the chart of the housing market, they've gone in complete opposite directions all year. So I think that's just kind of a word of caution I would throw out there.
Yeah, absolutely. What about some other high beta tech? I think we're going to get earnings report from Netflix later this week, and of course, this one had the stock split earlier this year. Any long or short-term thoughts on Netflix?
Uh, the thing with Netflix is I do think it's got lower to go. If you look at it just through a multi-year perspective, it's still trading in way too steep a slope for me to be able to chase it higher here. I'm a seller of basically out of the money calls, credit spreads on this name on any rallies. But what I would point out to you, what looks good to me is Facebook,
Okay.
Google, and there is one other name, and I just can't recall. I was just looking at this earlier. But if you just look at Facebook and Google, those names to me look, and well, McDonald's, but Facebook and Google from more of the techie stuff is stuff. Those are names that are that I think people might have to chase into year end.
Okay. Interesting.
So if you think about this, the charts are fairly obvious. They're making higher lows, or they made a higher low the other week, versus their August lows. But if the market really has seen the lows here for the year, then I think at some point in the not too distant future, in the next weeks or so, we would probably have to see fund managers having to chase these names higher, just because they've showed relative strength all year.
Hmm.
So I think that's where they're probably going to go there, and or in the energy space and that kind of stuff, where they conceivably should be able to pick up bargains, quote unquote.
You also mentioned McDonald's. Are you seeing the same thing in this one?
McDonald's is a little bit different. McDonald's to me is a contrarian play. And if you look at it just from a price action perspective, stock's been going sideways since early 2012. And if you look at it just like, so sentiment is still really bad out there for McDonald's. Everyone
Hmm.
thinks they're like, making chicken nuggets out of, worms or whatever, whatever all
Yeah.
that weird stuff that you hear on like YouTube and all the loonies out there, and all
Right.
that stuff. But McDonald's is actually just about tickling new all-time highs, and
Mm.
you wouldn't think that considering what the people are talking about. Additionally, I've been fortunate enough to test out um, their new create your taste menu thing where you do your own
What?
your own burger, and I tell you, it's awesome.
Wait,
Like,
wait, wait. You have to explain this. What is this?
so the McDonald's now, like, they've been doing this in Australia for a number of years, or at least for a year or something, I think, in California
Hmm.
for some time, but I tested it out in New York. And basically, you just walk in and there's like a computer and a touchscreen thing, and you just put together your own burger, and it's super high end. You get it delivered like like this fancy like board and this little fancy like sort of French fry basket. It looks like you kind of feel like you're in Paris to some extent. So
Ooh.
it's really nice, and I think that's not the reason necessarily why I love the stock, but it just shows to me that they're going the right direction because we're living in a burger bubble. I think globally, I think we talked about that last time. We talked about
Yeah.
Shake Shack,
Yep.
and I talk about burgers with you all the time on this show, don't I?
I don't know. Yeah, because you're Serge Berger. We have
I
to.
know. That's it.
That's
I can't
exactly what
shake
it
that. But anyway, so I like McDonald's. I like all burgers, but I really, from a technical perspective, I think McDonald's is setting up pretty well. And again, the contrarian play for me there, through a multi-month lens. This is not something I need to chase higher here. It's gone vertical for the past few days, but I think if this thing can pull back a little bit, I should be able to buy that. And by the way, it's got like a 3% yield, so
Mm-hmm.
that's a little bit of a comfort for someone that wants to play that as well.
That kind of sticks out to me, that computer system, because that's kind of eliminating the need for as many workers, which is a high cost in the
Well,
food
that's
business. Yeah.
Brianna. The unfortunate reality is that we live in a deflationary environment, and technology and the
Mm.
internet is basically the most deflationary thing that the world's ever seen, and deflationary and not good for employment in that perspective either. So,
Yeah, yeah,
you know.
absolutely. A couple more earnings we were just kind of looking forward to. I believe tomorrow morning. This is the last trading session we're going to have before we get earnings from Johnson and Johnson, one of these bigger conglomerates in the market. Any thoughts on that?
Well, I think those guys you have to just see what they say about the dollar and see how well they've been
Mm.
hedged. I think that continues to be the play. I just can't get excited about a stock that's been that's been stuck in a range between 90 and
Sure.
105. So for me, from a trading perspective, this is a complete snooze. But you want to listen to what they have to say from the headwinds. Maybe we get a better read of how they're hedged and how others maybe or may not be hedged to the dollar. And so then what you then have to do is you kind of have to look at your position in the dollar. Now I was I played golf over the weekend with a guy that has been following me for many years, and we just kind of discussed the implications of the dollar, and really the
Mm.
dollar is the biggest asset class in the world, bar none. Everything's priced in dollars, including most of the debt. So if we can get the dollar correct, then we can probably be pretty accurate, or at least not completely wrong about the rest of the asset classes. So, the question then is, how are these big conglomerates exposed to the dollar, and how are they hedging themselves? I would just listen to the language. If for those that are detailed enough to go through the earnings report, I would certainly look at what their comments are about the FX exposure and the hedging is.
Sure, that's a great point. Definitely have to watch the dollar, especially as we go into earnings season and the people mention anything regarding the dollar or FX headwinds and things of that nature. Last thing I definitely want to touch base on with you before we let you go for the day, oil. Barclays went a little crazy, upgrades and downgrades, changing price
Yeah.
targets in the oil sector, most notably upgrading ExxonMobil. We were talking a little bit earlier, thinking this might just be analysts chasing price in the stock, but what's your thought on oil?
It could be. I mean, I think the analysts are,
Right.
and they tend to be quite late in these things. Just the structure, and it's for one, it's easy to make fun of that, but it's also just because the structure of those massive companies they work with, and it's not so easy to make these calls so quickly. But I think, to me, honestly, Brianna, the oil trade really hinges on the dollar. If the dollar
Okay.
somehow wants to massively accelerate again, I'm thinking it's taking a breather. But if it's going to accelerate again over the next, you know, whatever 2 to 3 months or so, then I don't see how oil is going to be able to go vertical. I know there's a supply and demand story, but look, so that's one thing. If you look at it technically, by the way, crude oil is right smack at the 150 and the 100 and 200-day moving averages. So this is going to cause some natural overhead resistance. If we can clear on the front month contract, if we can clear, call it 51, I wouldn't mind chasing it higher because it's had a good move. So technically, I like it. But if the dollar starts rallying again, like strongly, I don't think you want to be exposed to this too much.
Sure, absolutely. We've just got a minute or two left with you here, Serge. How about some final words of advice going into this week for our traders and investors?
What I can tell you is that the conversation I had in the second part of last week with a lot of my hedge fund and institutional friends is that basically it's just we're very much just watching and see what the next direction is, because I think the
Mm-hmm.
market's been quite easy to trade for the past 2 weeks for traders, but I think now it's going to get tricky. It's really make or break. We're either going to confirm the rally we've seen, or we're going to quite frankly go and at least retest the August lows. What I'll tell you is that the lows over the past few years that we've had in the S&Ps always came on a lower low versus the lows a few days before or a few weeks before. So in other words, we always retested and made new lows before going higher. This time, the S&P did not make a lower low, made a higher low. So that's a bit of a change of character, including we have all those moving averages, moving down and moving to the downside. So it's all a little bit different this time. I don't think we have an October 2014 V-shaped reversal at our hands.
Serge Berger, he's the head trader and investment strategist at the Steady Trader. Serge, thank you so much for joining us this morning. We'll have you back in just a couple weeks.
Thanks, Brianna. Take care.
Thank you.